All right. Hello, everybody. Welcome back to another episode of Tech Bros. It has been a week. We weren't able to do last week, but a bunch of things have happened in the world of technology. Obviously, this podcast is still heavily focused on Robinhood, so we'll be discussing that as our first topic today. S&P 500 stuff happened on Friday. I'll call it stuff, to say the least. We had some major updates today that we're going to be talking about in regards to Vlad, InvestAmerica, and then we'll probably discuss a little bit of NVIDIA, Google, Apple towards the end of the show as well. Tanner, Roy, how you doing?
Great.
Yeah, really well. It's been a great day.
Okay, so I think we'll get started with the debacle that was Friday. Tanner and I were live trying to figure out if we got into the S&P. Tanner, what was your raw reaction to what happened?
I mean, I posted as if they got in, but then it turns out they didn't. I think that they wanted to goof me a little bit. No, I mean, the truth is that their site was down this entire time. Then turns out everyone was sitting there waiting for nothing. Not S&P 400, 500, 600, not a single move. Like, it honestly seems like that's like, how could that possibly be the case? I'm sure there was a bankrupt company in those last 1,500 companies between the 400, 500, and 600 within that period of time in the last 3 months. How is that possible?
It's weird.
We've got
Roy?
Caesars Entertainment at $5 billion.
Yeah. So this, I have to show this off. I rarely pound my chest and yeah, I got it. Last year I was burned by being too quick and trying to be quick on the draw. And I'm like, okay, I got called out. I was wrong. I'd rather be accurate than be fast. I don't really care about the views and the clicks as much. Monetization of Twitter is lousy. Anyway, so I posted this. I posted a lot of stuff probably over this year. This is the most proud of any post I've been. And it was, hey, big move after hours, but I haven't seen any announcement. Be skeptical. Yeah.
Right.
So my caution, I was like, they probably got in given the move, but I'm like, I'm not going to post that. I'm not going to assume. I've not seen it with my own eyeballs. And I've learned, news travels fast on X, but fake news also travels fast. And just like LLMs, even if it's your friend posting, you don't know where your friend got the source from. They might have gotten it from someone else that they trust, and so forth. And then it could go all the way back to just a rumor. So trust but verify, in the word of Reagan.
I agree. Did you guys expect zero rebalance at all?
No, that's stupid.
Did anyone?
Is that stupider than William Sonoma getting in? Because I think it is.
Hood not getting in or William Sonoma getting in? What?
No, last time they put, picked 4 companies, and I think 2 of them are great. One of them is okay. And then William freaking Sonoma getting in over not just Robinhood, but dozens of amazing companies. And they picked that, which would not be even eligible now. That was dumb. I feel like no rebalance for this and 2 other indices was even more stupid and ridiculous, given that there's 130 companies that are under the market cap waiting, and there's 30 something companies additionally that have not been profitable in a long time. We're talking about more than 4 quarters and are under the market cap wait. Give me a break.
Yeah.
I didn't expect it, dude. I mean, I thought we didn't have to get in, but the idea that it's just so, dude, they haven't done a no rebalance across 400, 500, 600 for 3 years. So I don't know, dude. It was just random. It was the most random thing ever. And the worst thing is they didn't put out a press release. And so all of us are just so we just have to wait. It's so weird. I cannot believe this is the 21st century we're living in. But yeah, unfortunately, some of the news started spreading on X and people thought we got in. I thought we got in, but we didn't get in. And no one got in this time.
Yeah.
Do you think we get in by the end of the year? I guess is the question.
Yes.
Yeah. I think both Robinhood and AppLovin should definitely be in. Sure, there's probably some other names that are highly qualified, but at least those 2 names. And honestly, AppLovin might actually deserve it a little bit more.
It does. It's the largest market cap of any company that's eligible, not in the S&P 500. And usually those are a shoo-in to get in within 1 or 2 quarters. It didn't last quarter. I was like, it's probably getting in this quarter. And if that was the only one, I'd be like, I'm not mad. That's a good pick, really good pick. Plus they're positioned very well, and they bring diversification into the S&P 500, which is an important criteria. But yeah, there's like, even if they chose like Block, I'm not bullish on Block. I think there's a lot wrong with the company. It's eligible, and it would be a lot better than Caesars Entertainment or whatever they have in there.
Yeah, there's a couple weird names there, I guess.
Oh yeah, there's more than a couple. So the funny thing is, Friday I went from like S&P 500. What are you doing? Your communication is garbage. Your server is run by hamsters. You don't know how to pick quality companies. You're leaving in so many that are just ridiculous. Still the best indice, I think, to invest in, although the Nasdaq's very compelling too. But I'm like, man, short the S&P 500, not the index, but the actual company. And then today it's like, oh man, S&P 500 might be a good investment vehicle because there's all these different accounts that we'll talk about in just a moment being created. And there are some other vehicles which it can run on, but S&P 500 is going to probably be the favorite choice there.
Yeah. Look, it's going to happen, even if it doesn't happen. I mean, the stock, it's at 74 after hours. We do have some macro news in regards to trade updates that might be helping the entire market pump. But like, this is, most of us thought, including myself, this thing was headed to 65 if we didn't get in. We barely touched 69 this morning. And so,
boys, there's actually, I'm thinking back because we haven't covered too much. There's actually a decent amount of Robinhood news today. Like, I don't know if we're going to need many other topics today. Unfortunately.
Yeah, probably not. We can have a good old weekly episode.
Yeah, like we have, I don't even think we covered maize color.
Oh yeah, we didn't.
We didn't cover that. We didn't cover, website traffic just came out.
Ooh,
The finishing acquisition of Bitstamp, I don't even think we spoke about.
Okay, so like we have plenty of hood news.
Yeah, like crazy.
Okay, so then let's get into the big update. So that was the S&P 500 stuff. This afternoon, I think the Robinhood thesis, at least the title of my stream, is the Robinhood thesis just got way bigger. And that's because, well, Robinhood could be the go-to platform for a brand new initiative by Trump. Here's Vlad at the White House speaking about why he was at the White House today.
Right. Vlad Tenev, co-founder and chief executive of Robinhood, here at the White House for the InvestAmerica Summit, which is an amazingly important initiative to give every child born in this country, 3.7 million babies a year, $1,000 in a brokerage account where they can invest in a diversified portfolio of American companies. I think this is super important. Brad Gerstner, the InvestAmerica team, have done a nice job, and Robinhood has committed and already actually executed upon putting our technology resources to bear to make these accounts delightful and easy to use, and actually making them available to children. So we showed that to a lot of folks here, and I think people are excited. So I'm hopeful that this initiative actually shows the power of investing in the American system and capitalism for all Americans.
And then this is what Trump said about it today as well.
So they've come up with some fantastic ideas. We're putting them into use. They're really the greatest business minds we have today. These men and women lead large, successful companies, and they're committed to contributing millions of dollars to the Trump account. And it's really, it's going to be something incredible for children and for their employees in many cases. Here's how the accounts work. For every U.S. citizen born after December 31st, 2024, before January 1st, 2029, the federal government will make a one-time contribution of $1,000 into a tax-deferred account that will track the overall stock market. In other words, it'll be pegged to an index that we'll pick. Right, Michael? We'll pick it. We'll pick a good one. Maybe you should be the index. I'd like to have that. These kids would be very wealthy if that were the case. That would be good. I think we might do that, Michael Dell.
All right. So InvestAmerica, $1,000 a month or $1,000 a year for every kid, or one-time payment as soon as you're born, gets tracked to the S&P 500, 3.5 million babies a year. So about $3.5 billion bucks. Here's the kind of puzzle here, and then I want to get everyone's reaction. So Brad Gerstner, he's been championing this bipartisan piece of legislation for about 2 years now. He's going to get it passed through the big, beautiful bill. He invested in Robinhood $128 million in Q1. It hit me today that, wait a second, he invested in Robinhood. Vlad, what other reason would he be at the Invest America Roundtable today if not to show off the new technology that I'm going to show on the screen in a second in terms of the demo, the prototype they built for these Invest America accounts? And you got Vlad and Brad sitting together with Trump talking about it today. Is the bull case now even deeper because you got millions of newborn babies that might be set up on Robinhood as soon as they're born and then stay with Robinhood for the rest of their life? Like, how are you guys thinking of everything that we heard about today? Roy, I'll start off with you.
Incredibly bullish. There's so much. So just like in general, I think that this is a great thing. It's just for 4 years. It phases out in 2029. But oftentimes when something is successful like this, they end up, continuing on. And I hope that they do. I hope eventually that this replaces Social Security. I just think that system doesn't work. But as far as Robinhood and investments, like, okay, 3.5 to 3.7 billion babies, not billion, million babies, American born that are eligible for this per year. Robinhood isn't just going to get like 10%-ish of them. If you look at like active accounts, they're about 10% of the US population, a little bit less. Overall accounts are a little bit more. Now, the reason why they're going to get a lot more is this right here. And I love what you're showing right there. Like, it's great that Robinhood, like, they have the product right there. It also shows the power of compounding right away. The user interface is great, and we know that they're going to have something very compelling. But if you can throw this up real quick, Amit. This was from their Investor Day platform, and they showed, it's a little bit dated, but I'm sure it's about the same, the distribution of assets under custody at Robinhood by age. And you can see millennials, median Robinhood customer age is 35. Why is that important? Well, a lot of other brokerages like Schwab and so forth, they have a lot more assets under custody. But guess what? Their customer age is not 35. It might be 70. It's probably not 70, but it's well past the normal childbearing age of most Americans. And so as a result, they have the exposure to Generation Z. Alpha shouldn't be having kids, but there will be a few, sadly, and millennials. And so they are going to really be well connected to Robinhood, have that trust, have that naming brand. Now, the other reason why it's so freaking bullish and amazing for Robinhood is marketing. Which company out there is going to market these better than Robinhood, or provide the incentives that really get people excited? Like, one of the things I was thinking, well, I don't want to go too far in the marketing. I've got lots of different ideas and ways that they can leverage it, but they're not going to get just 10% of these. I wouldn't be surprised if they get, close to 25% of these accounts. And the great thing is, like, this is just the seed money that can lead to a lot of other benefits along the way. Parents can put up to $5,000 in there. Employers, it caps out at $5,000. Of course, the accounts phase out at 30, but that's 30 years where you have them for that long time. And also, it'll be somebody's first experience with Robinhood too along the way, where they'll they'll look at what their kids have and they'll look at what they have on Fidelity, and they'll be like, yeah, I like what Robinhood has, and they want to give me a matching bonus to roll things over. Absolutely. So this accelerates them. One last little piece is there are bull market years where a lot of accounts come in, a lot of people put funds in there. There are bear market years, and this is an amazing thing in bear markets, because guess what? Children are still born in those years too, and they still put the $1,000 in. So it helps provide growth even in those difficult bearish years. So it's awesome. I'm super excited.
Yeah.
Anna,
whenever I was a financial advisor and you were looking at wealth clients, there would be two style of clients that you could go after, really. You could go after the older clients who are retiring. Their assets under management were as high as it would go. Okay. Obviously, there's outliers if someone's young, and like Vlad would have been my best client by far. But you know what I mean? The older you get, usually the more money you have. But those clients are withdrawing at a steady pace. On the other side, you can go after young clients, especially child accounts and everything, where they have steady packs or pre-authorized checkings. Like they continue to pour in more money and the accounts get larger and larger. Those accounts are usually smaller, but they're fast growing. And they're not trying to withdraw from them. They're trying to add to them. And I sold a book of business whenever I was there, like whenever I left. Whenever you go to buy those clients, like buy a book of business, it's more expensive to buy a young account that's growing because the like you're going to make more and more from that client over time than you are to buy older clients who quite literally are going to die off and spend away that money. So it's a little interesting how you want to look at it, but I think that goes very well into these fintechs who are really pushing hard for InvestAmerica and products. And it's not just Robinhood, by the way. There's like, from what I understand, this is going to be an account type that every single brokerage will be able to offer. But it seems like the fintech names are the ones that are really pushing after it and are right there. So in terms of immediate change for these businesses, I don't really think there's much. It's not a lot of money. Those clients are not going to cross-sell into other products. They're 1-year-olds or, brand newborns. But overall, I think that it deepens a client's relationship within the brokerage. They have not just their money, but their, entire family's wealth within a certain brokerage, and it makes a stickier customer. But I think that this is just part of the role that we see from Robinhood. Like, we want them to continue to push out new products, deepen their relationship with customers, but I actually don't think that this changes much of anything. I think that this is just a regular ad.
So here's who is eligible. It's non-bank trustees that are approved. There can be other approvals as well per the Secretary of Treasury, but this is who is approved as of March 1st, 2025. As defined in this bill, not for this purpose, but other purposes as well. So it's even things like Pershing is on there, so Ackman's group. But of course, Robinhood is there. We've seen the product, and it's not a surprise. But a lot of these, like the Solomon Foundation, Moody Bible Institute of College, like, do you think that they're going to get many people? No, they're not going to.
No. But I saw Apex Clearing on there, so
yeah.
Like, is that every fintech ever?
No, it's not. Just Apex specifically.
But they don't offer. They don't have customer relationships, do they?
I don't think so. I was a little bit curious why. Again, this is not a list created for this purpose. Instead, if you look at the actual bill, the HR 1,000 something pages, you look for Trump accounts, which is what they're called. It specifically says that this, in addition to banks also are eligible for this too.
Yeah. So. Yeah, I can't imagine JP Morgan, Wells Fargo don't have access to these new accounts.
Yeah.
I think this is super bullish, bro. I mean, I can't believe I'm realizing just now that part of the reason Gerstner invested is because he saw the future of Robinhood being a platform that could help him facilitate InvestAmerica. Like, at the end of the day, are these newborns going to want to be on Schwab and Fidelity? Probably not. Now, will Schwab and Fidelity still play some role in custodying these accounts? I'm sure they will. But if Hood is able to get even 10 to 20%, as Roy was saying, of these accounts every year, these accounts are with them for life. I mean, those are assets under custody that get seeded by the government for life. It's like free money coming from the government. It's our taxpayer dollars, but it's going into Hood from a custody perspective. And then it gets to just, if you're bullish America, compound on Robinhood.
I don't get me wrong. I think InvestAmerica is a great idea. I think it helps with financial education. I think that multiples on American stocks will rise as more households try to or learn more about the stock market. Like, I think it all has great efforts. But we're talking about accounts that have $1,000. It's like exclusively going to. Well, one, I don't think it brings in a lot of assets under custody in general. And then two, in terms of the KPIs or the metrics that people are looking for, it lowers deposits per customer, revenue per customer. All the metrics are going to go down.
I don't know if that's the story here.
No, I'm not saying, but like, this is not like, how is this ultra bullish? These are child accounts. They won't add anything to the bottom line.
Because they won't be children forever. It's
I know, but are we investing for the next like 5-10 years, or are we excited for them to compound over 30-40 years? Because that's when it's going to matter. 30-40 years from now. I'm not worried about that.
The market is forward looking enough that 5 to 10 years out, if it doesn't realize it right now, it's gonna be really good. Now, short term, near term, this might actually be something. I mean, it's not going to be a revenue driver at all, or very, very insignificantly. And depending on what kind of matches as far as the marketing that they do, Like I don't think that they'll match the $1,000 or do anything like that. I think more likely than not, they'll be like, hey, create this account for your children. If you're a Robinhood customer, we'll give you $30 or whatever, or $50. If you're not, you know, if you create an account with us, so maybe they'll give you even a little bit more, and we'll put it right in your Robinhood account, something like that. It's going to drive Robinhood adoption, which is really the story here. And over time, like it's going to take time, but over time, not everybody's going to be putting in the $5,000, but there's going to be a lot of new accounts created. And those are going to be people that stay with Robinhood for life, or at least until 30, when the Trump account is no more and it becomes just a whatever normal account.
As far as I know, because I think I've seen somebody post about this on X, you can fund your kid's account on Robinhood today. No, like I think I saw somebody.
Like
it might even be
custodial
someone
accounts?
that we do. Sorry,
They don't have custodial accounts.
Yeah, this is custodial accounts. This is cool because it's custodial.
I saw
People
something
have
on
been
X
demanding
about somebody picking out stocks with their kid. Someone we know.
not legally. You can't do that.
Okay,
You have
maybe it
joint
wasn't
accounts that you
wasn't
can do with
legally.
your spouse, maybe outside of your spouse too, but children under the age of 18, there has to be a custodial account in the United States.
Well, let's say Robinhood gets 10% of the 3 million, and they get 300,000 accounts for the next couple of years. Yes, you're right. It $1,000, not that big of a deal. Yada yada. What if Hood does what Hood does best and say, we're going to give a 1% match on top of that 1,000 or something? Or they say, hey, if you're a parent and you want to be integrated with your child's custodial account on this platform, we're going to give you a 1% or 2% match to bring over your IRA or something. Like,
of course, but that's just Robinhood being Robinhood.
yeah, but you need the 300,000 kids or the 3 million kids signing up to your platform to kind of get access to those parents, those, you know, from a distribution perspective.
Yeah, but I don't think that Robinhood has any inherent benefit or like advantage here. Every single bank, every fintech will be going after the exact same clientele.
No, but dude, has Schwab or Fidelity showed a demo like Vlad showed today?
That doesn't matter. The second it launches, they like. I overall think that
Tanner, read between the lines. They did not come up with this in a couple hours.
Of course,
they've been working on this for a month, if not longer, which means they've been coordinating with the White House.
Of course, guys, you're missing my point. What I'm saying is that this is not an exclusive deal with Robinhood.
Of course,
well,
I'm betting on Robinhood compounding at 30+% rates going forward. I think that they'll be able to hold up great rates. Do these child accounts change that rate of growth? The answer is no.
Not over the next five to 7 years, but long term it does. Long term, this is accretive. This isn't like
it's accretive, but it's accretive to every financial institution.
No, but it's going to benefit Robinhood significantly more. Go ahead.
Yeah, look, it's anyone can compete for this, but what if Robinhood gets 25% on a conservative estimate?
What if?
No, that's what we're analyzing. What if they get 50%?
You're basing it on nothing.
No. Let me. It is not based on nothing. It is not based on nothing. Again, they own 10%, or 10% of Americans have Robinhood accounts. Actually, a little bit more of American adults. They skew heavily towards that childbearing age, and so if you look at, we don't know the number, but if you look at like those that are childbearing age that have Robinhood accounts that are active, it's probably closer to 20 to 25% right there. People are not going to be like, oh, I don't have a JP Morgan account, but I got something in the mail that says I can create this InvestAmerica thing, and I'm going to go with JP Morgan. They're going to go with names that they already know and have exposure to, and they also are familiar with the user interface. That's Robinhood. They're also going to secondly go with the company that markets the most aggressively and markets the most in the most compelling way. And out of all the banks that are out there and all the brokerages, who does the best marketing? Well, you might say Robinhood you might have somebody that's number one ahead of Robinhood, but I think Robinhood is number one. They absolutely excel at this. And again, they can leverage this. They have a real flywheel that they're building. So like, just think about it this way. If they're like, okay, I think matching the $1,000 for the child is going to do absolutely nothing. But what they can do is just say, okay, if you have a Robin account with us and you create this account, we'll give you $50. That doesn't sound like a lot, but it's $50. People like free stuff. That's awesome.
Yeah, but that's just acquiring a customer. That means nothing. Like
you got to let me finish. So you can do that. It's going to drive, that'll bring some childhood accounts there. But if you don't have an account, you get $50 in your brand new Robinhood account that you create. You have to create it to have it. Now, right now they have the credit card. There's a big waiting list, but eventually at some point there won't be. It'd be like, hey, now that you're a Robinhood customer, look at all these different investment vehicles. Look at the credit card. Look at the banking product. They can basically offer these sort of services that people are exposed to that weren't previously. And then as the child matures, they're going to have, like, Robinhood of today is not going to be Robinhood 10 years out or 15 or 20 years out. When the child turns 18, there are certain things that the child can do tax-free according to this bill. Buy a house. So Robinhood is going to be in the mortgage space, probably in some capacity, or they'll have a partnership. Or you can build a business. Is Robinhood going to be able to figure out a vehicle for children that are maturing? They're like, hey, I want to use these funds for a business. Absolutely. And so forth. And so this is going to accelerate adoption for Robinhood and also help build out the flywheel. And it's easy. Like, they're so positioned so well. So, like,
I don't see how it accelerates adoption.
Lastly, looking at this and saying Robinhood is not going to disproportionately benefit is ridiculous.
How does it accelerate adoption?
Adoption of
customers.
Hello?
Oh, no, just answer it.
They get
okay.
Hold on. If they get 50% of these 3.5 million, I know I'm saying if, but let's say that's 1.5 million accounts, Tanner.
Yes, but okay, you're talking, whenever I say adoption, I don't mean the kids that are bringing $1,000. I'm talking about the parents that
Roy
have
just
those
told
kids.
you the parents now have to manage this account, which means they might be incentivized to sign up for the credit card or for the bank.
Yes, but no. That's not acquiring new customers. That's cross-sell. How does it acquire new customers?
That's a new parent that wasn't on Robinhood before.
Why did the parent come over? Why can't they do it at their existing bank that they have this option to sign up for free anyway?
Because
marketing. Robinhood markets well.
Yeah, but they're already doing that. This doesn't change that.
No. Hold on. If I'm a parent and I have a child and I get a Robinhood account for my child because Robinhood's the de facto platform. And
why are they the de facto platform?
No, hold on. We have to assume that, right?
No, we don't. You know where they're going to sign up for these accounts? Where they bank. That's where they're going to sign up for these accounts.
No.
Yeah, most definitely. It's where do you get your mortgage? Where your primary bank is, or the ones that offer you the best rates. If Robinhood wants to offer a better rate, yes, it'll sign up faster. But we have no case to say that they're going to start paying for these youth accounts. None of that's proven. That wasn't in the demo.
But I think the reason Vlad was there and the Bank of America CEO or the JP Morgan CEO was not there is because there's obviously some connection between Gerstner, Trump, and Vlad, Robinhood, of, hey, maybe their tech is going to be the go-to platform that this entire system is built upon. Maybe.
Yes, but I believe that Robinhood will be the fastest growing brokerage. But this does not change that adoption rate. That's all I'm saying. Like, Robinhood was exciting before this account, and now there's an extra $1,000 per pregnant parent that is with Robinhood. Like, it's not a lot. Like, we're talking about a couple $2 billion of deposits. It's like,
that's not the story though, Tanner. The story is the fact that they're on Hood for the next 18 years.
I know, but I'm saying that this is an investing channel. I get for Vlad and team why it makes it a generational company, but that does not change the proposition of the investment.
Dude, we get customers for the next 18 years compounding in the S&P, where the account is worth 30,000-40,000 in the net. Like, that's bullish. I don't know what you're saying.
But we were already doing that.
And it's hard to see this.
I don't get how you guys don't see this. They're like, for the next couple of years, you're having $1,000 accounts that go from 1,000 to 1,300.
It's not about that.
I'm aware it's not about that, but that's how, whenever new investors look at this opportunity, they're going to look. You have to think about this from just an investment standpoint. Like re-look at this company from the start. They're going to take a look at deposits, customers, the product base, everything like this. The products that Robinhood is going to offer with these accounts is going to be, it'll be an account type. This is not a new product. It's an account type. And new customers are just going to sign up with the bank that they're already at. No one is going to switch from SoFi to Robinhood for this account.
Wait, was this all about SoFi? Was this
No, I'm blown away that you guys don't see this.
Was this all about the fact that Noto's on the board of this InvestAmerica thing,
No,
but he didn't show
it's
up?
because
He didn't get a
everyone was
picture with Trump?
posting.
Is that what's going on?
Everyone was posting about the fact that Robinhood was the only financial institution. Like,
Oh, I
dude,
didn't say that.
I didn't say you said that. I said people were posting about it.
You said
Are you mad?
I did not say you.
That no one cares that Noto is on the board of directors on this. Is that what you're?
It's
Well,
good
He
for
is.
SoFi.
He's the CEO on this council, and Vlad isn't.
Yeah,
So,
but he's not on CNBC talking about the massive wealth transfer opportunity. He's not in the White House with Trump. Like, is that what's making you mad up here? Because I don't get how you're.
I'm not even mad. I'm excited for this, but let's not blow this out of proportion. Like, this is the most exciting. Like, I'll be way more excited whenever they put out mortgages, because like a few mortgages will pay for tons and tons of kids. Like, you know what I mean? Like there are products that mean more than these tiny accounts.
Okay, let's take a step back. And Tanner, I don't know, like, as far as your friend network and everything growing up, but I grew up lower middle class. We eventually got to the point where we were middle class or upper middle class. But I had a lot of friends that were lower middle class too, and a lot of their parents, just didn't care about their kids at all. Didn't teach them about investing or anything like that. But the way that the parent mind worked, and was if their kid could get like $1,000 investing account, they're like, maybe I'll fill it out, maybe I won't, no big deal. But they're very much motivated by greed, and so if there's an incentive that's even like $50, it'll take you. And of course,
I believe
there's
that.
all these companies we looked at. There's a ton of banks, there's a ton of brokerages and stuff that are eligible. Robinhood is not the only one.
But you're saying that none of those
But
banks
out of
will
all
offer...
these entities, who is going to have the easiest way to sign up? That's quickest, that's slick, that's easy to understand, and that's rapid. It's going to be Robinhood.
Yeah.
Who's going to probably offer the best incentives to sign up? It's again going to be Robinhood. Who is going to market it the best? Again, it's going to be Robinhood. And which of these is going to be the better known name? Robinhood might not be the number one because banks are out there. JP Morgan is a big entity, but it's going to be a top 5 institution for sure. And so they're going to get a disproportionate size. It's not going to be all banks. They're going to go after this, I think, pretty aggressively. Now, we don't know what those incentives are. Maybe Robinhood will be like, let's be like Anthony Noto and sit on our hands and not do anything and just hope and pray that the situation changes. But I don't expect that out of either company. I think that they're going to go after this aggressively, and they're going to get a ton of accounts, not just on the child side, which some will add to and some won't, but a lot of those parents that come over. Now, the other thing, Tanner, last bit, is some of those people will be like, they're just lower income, white trash parents, whatever, like that don't care about their kids. They don't care about this. They care about the free $50. And do you know what product is super compelling for people like that? And I don't like this, but events contracts, the gambling stuff. They look and they see, oh man, I can do this sort of thing. I don't like that again as just a person, but the reality is that's really bullish for their ecosystem.
Tanner, what percentage of the accounts do you think Robinhood's going to get? Like what? Because you're obviously not.
I have no clue.
But you have to think it's like
15%, 20%, like whatever they're.
That's amazing. 20% of 3 million people to do that, zero acquisition cost from
he just said it was $50 an account.
I think I don't understand how you're not getting the point that when
listen,
hundreds of thousands of customers for free and they grow up on the platform.
Yes.
And they can use the credit card, banking, all this. Like, how is that not? Yes, that's not
It
going to
is,
increase.
Dude, you guys are putting words in my mouth. In no way have I said this is bearish, but you guys are saying this changes the thesis, or that Brad Gerstner invested in this company because of $1,000 accounts. Let's be real. He saw a compounding business that is growing faster than other investments that he's applying to. And then he said, probably there was a meeting where he said, hey, you should help me back this InvestAmerica thing. It would work well with your business. In no way was that part of his thesis for investing millions of dollars.
I get that, but you're saying you're stressing over $1,000 account, and Roy.
I'm not stressing over anything. I'm excited that it's happening, but it doesn't change.
But
my
you're
thesis.
not seeing that $1,000 account is worth way more than 1,000 in 20 years.
I've been in this business. Nobody looks at like youth accounts and goes, oh, they deserve a much higher multiple. The real gold is in going after the retirement accounts who are bringing over millions of dollars per account. You know what was a thesis changer for Robinhood? Was going after retirement accounts that changed the average deposits from 3,000, and then the new cohorts were 100,000 plus. That's a 10x opportunity. So with things like strategies or robo advisors through Trade PMR, that completely, like, those are 10x opportunities. The youth accounts, cool. It's like adding legends or something like this. Like, I'm happy it's here, but it's just another account. It's just another account type. It would be the same as them adding custodial accounts or something. It's $1,000 a year.
All right, dude. I mean, I thought you were going to be more bullish on this, but
read the donation that came in from JJ. I think that actually sums it up pretty well.
The hood sloshing is insane. What is sloshing?
I don't know.
I think
it's not. It's sloshing.
I think it's something dirty. This is a cool idea, but it will be a commodity product, just like educational IRAs that exist today. No parents are changing banks to set up an educational IRA. Stop it.
Agreed. Agreed. The customers will come to Robinhood because they have a better product, but they're not going to disproportionately come because of this product over just the brokerage in general.
Tanner, we debated on your channel when the stock was $7, and the debate was, does Robinhood have a moat? And my argument was yes, your argument was no, and it was based on UX. I don't get how you don't see that the user experience of this product is going to be so much better than everything else, and it will create momentum to get a significant amount of these millions of accounts, and that will keep a lock-in effect with those babies throughout their lifetime, but also with the parents of those kids that might want to incorporate themselves into Robinhood. That doesn't mean the AUC is going to go up overnight. Doesn't mean deposits are going to go up over, but this is definitely positive for the next 20-year vision that Robinhood is trying to compete with the Schwab and Fidelities of the world that have trillions of dollars in assets.
Yeah, but it's beneficial to those accounts as well, to those companies as well, because the customers that get signed on to Fidelity or whatever other name will be sticky for decades to come.
Unless Robinhood gets a majority of them, which is the debate.
Yes, but I don't know if that's going to happen.
Well, no one does, but like,
I know, but the things that we do know is
your argument is like, that's definitely not going to happen. And Roy and I are like, well,
I didn't say, you're putting words in my mouth. I didn't say that. I'm saying you guys think that there will be a disproportionate number. And I'm saying, unless they're going to pay for that, there's no way of knowing that. So like, if they pay for it, then that's just a customer acquisition cost for a certain number of assets under management. It should be looked at numerically.
Even if they don't pay and market at all, they'll still get a disproportionate amount just because that's who their customer base is. They're having kids, they're having babies, not the people that are in Schwab. They're just not.
Sorry, I didn't hear that.
They are going, even if they said, we're going to give zero incentives and we're not going to market this at all, which frankly would be unbelievable. But if they do that, they're still going to get a disproportionate amount just because that's who their customer base is. Again, median age is 35 on Robinhood. That's significant. I don't know that there's many brokerages and banks that have an age demographic that skews that heavily into childbearing ages. But even beyond that, like just think about like this marketing thing where they're like, 5 minutes gets you $50 and secures your child's future. Boom, done. That people are like, 5 minutes for $50? That sounds like a scam. Wait, it's Robinhood. I know that company. Let me just give it a click. They get $50. Their child gets $1,000. Done. Like, it's just,
dude, all I know is I need someone to make some babies with because I want a free $1,000. So I'm gonna have 5 kids, get that nice 5K pretty soon.
I got to talk to my wife. It's like we got to get maybe a 4th child. So
gotta pop them out, bro.
I want to make sure that everyone understands my thing. I do in no way do I think that this is negative or that this is bad for Robinhood. But just like what happened with the stock today, no one cares. Like it's not that big of a deal. I think that it's positive, but it's also positive for SoFi or for other fintechs or brokerages.
SoFi is not going to come out with an account for kids that's going to be what usable or good or exciting, bro. That's
they're going to do well. SoFi
they're going to do it at the exact same time as Robinhood.
But how many customers do you think SoFi is going to get on this? If you think Robinhood is getting 20%, what SoFi is getting 20%?
I would. No,
I think they might get 1.2% if they're lucky.
No, it'll be proportionate to whatever their audience base is.
So like SoFi has some of the same strengths as Robinhood, just because their age demographic does skew younger, and they've done a very good job as far as marketing themselves and building that trust. That's the importance of stadium deals and that sort of thing. And so I think that they'll do better than perhaps the percentage represented by their brokerage size, which is tiny, and their banking size, which is a little bit bigger. But yeah, it's not going to be
It'll be
anywhere near
proportionate to
size.
the.
But do you think SoFi is even going to pursue this?
Yes.
Yes, he's on the board. He has a more impactful role than Vlad does.
Well, no, I get that, but he's not taking selfies with the guy who's making the
He
initiative.
posted about it today and how they're going to not only fund it and run a program for it for Galileo, and he said that he's going to match his as an employer, he's going to do that for his own employees. He talked about it multiple times today.
Look, I'm just saying underestimating Hood's ability to get a majority of these accounts seems.
No, I'm just saying I don't see how they have 26 or going to be 26 million accounts or whatever. I think that they'll get a proportionate amount of whatever the adult population is for millennials or wherever they're at for those amount of accounts. Or SoFi has about 3 million or whatever between brokerage and money that would be in that age or something like that. I think that they would get that percentage. So whatever that is to Vlad's, obviously they're not going to be at Vlad's size, but whatever that is. But
that's north of 15% then for Robinhood, which is not small.
I'm not I just don't think that
Tanner, I agree. Roy and I agree with
users because of this.
Roy and I agree. It's not going to move the stock or anything. We get it. It's not going to increase AUC, all that stuff. We just think
but the hype whenever we were getting started, but being ultra bullish and everything like this, it was a little over exaggeratory.
I don't think it's. First of all, I don't know if exaggeratory is a word, but second of all, is that a word?
Yes.
It's a hell of a word, but
it is now.
The hype is the network effect and lock-in effect that they can maintain if they do get north of 20% of these accounts, which maybe they get 2%, who knows? But if they do, and the product experience is so good and they have their incentives and they market it the way Robinhood does, I don't know, bro. It feels pretty damn exciting.
I'm excited.
So Tanner, let me ask this, because I think that this would be very much underachieving what Robinhood I think will actually do. Do you think Robinhood gets 10% of the InvestAmerica accounts that are created over this year?
No, because you're saying that proportionately it's roughly a little over 15%. I definitely don't think they're going to underperform this market.
Wait, so I might have confused you. Do you think that they're going to get more or less than 10% of the InvestAmerica accounts?
Whatever their population of accounts in that demographic of looking for children or wanting to get children is, they're not getting less than that.
Okay. Yeah.
I don't know what the population of that is in America, but
yeah, it's somewhere, and this is just napkin math, but it's based on that median age. It's somewhere around 15 to 18%.
Yeah. So they're not getting less than 15 to 18%.
Yeah.
And I honestly think that they could probably outperform that if they do marketing and everything like this. I 100% agree with you, but I think over the long term it's great, but they were going to win in the great wealth transfer regardless. They were going to dominate that.
So
this, you know what I mean? I just don't. Sure, it adds, but marginally.
This is more about the long term than the short term. Robinhood is one of those companies where I could easily see myself holding more than 10 years. I think that there's one other company in my portfolio that I plan to do that with, and that's Palantir. And there might be others along the way. I'll have to see the thesis evolves. But just think about it this too. The first year, let's say that they do get they do aggressive marketing, they get 25%. I don't think that's crazy. It might be 20%. Fine. 2 years down the road, they'll still have this program, and somebody will come and be like, "Hey, wasn't there a thing where you signed up your baby and they gave you some money and your baby got some money? Oh yeah, who did you use for that?" 25% of Americans will be saying Robinhood. I think that this is a thing that, yes, there will be many, many, many companies. We saw that massive list that are winners. But I think if Robinhood gets to 20 to 25%, I don't think that number goes down over time, but continues to increase. So if they do expand this beyond 2029, and they may not, but if they do, by 2035, we might see Robinhood getting 40% of these accounts. This is going to be a significant future growth driver for not just for those kids like near term and flywheel stuff, but for also those that just for whatever reason Robinhood has not captured. A lot of people also associate Robinhood with degenerate gambling, and there's some reasons for that. But like ultimately, they'll look at this and be like, "Oh, they also do this too. Maybe I'll give them a second look." Like it just accelerates what they've already done very well. Near term, again, you're right. Not a revenue driver at all.
Everyone thinks I'm negative on this. I'm not like.
Why do you hate
I'm not
Robinhood?
negative at all. This adds more investors. I'm positive on it, but I'm more excited about InvestAmerica in general than I am about Robinhood's role in it.
Yeah, I hope this eventually replaces Social Security. They'll have to phase it out over time, but that's a different discussion. So,
all right, cool. So, this one, we'll see how this plays out. I'm just happy Vlad's in DC and he's getting to be with Trump and all this stuff. I mean, at the end of the day, we need our CEO cozying up to the administration. So I think from that perspective, it's hopefully a win as well.
May color?
Yeah. So May data came out. I think there was 90% bullish parts of this data and maybe 10% that wasn't the best, but this is the data right here. So we're going to get actual data, I think in a couple of days with all the specific numbers, but equities all-time high in April or in May, options all-time high, crypto was up 30% month over month, AUC all-time high, and then margin at 9 billion all-time high. Cash sweep as well, all-time high. The only thing that was a little bit off to me is net deposits were only 3.5 billion. Granted, we've gotten kind of used to Robinhood getting above 5 billion a month. This month they have 3.5 billion, didn't pay as much for bringing over ACATS transfers, but still pretty damn incredible to put up almost 4 billion in a month in deposits. So I felt it was pretty bullish. Market thought it was bullish. Tanner, your thoughts on the May operating data?
I mean, the trend rate here is that crypto is not what it was in the end of 2024 and 25. That's why I thought a lot of the run up for Robinhood recently was S&P 500 inclusion. They continue to hold up a really high price, but I don't want the market to assume better Q2 results than what is actually showing up here, because revenue for the last 2 quarters will be going down. Like Q4 is showing to be a quarter that's hard to replicate.
Roy? Yeah, we showed this a couple minutes ago.
I completely agree with Tanner's take. 100% accurate on that, but not what he said before about the $1,000 he InvestAmerica. But the main numbers he's point on, as he usually is. One other thing. Well, did you? I don't think you showed. Did you show this tweet?
Yeah, I was showing it a little bit, but yeah, he's demonstrating the UI.
When we look back on years from now, this may be the day we say the Great Wealth Transfer officially began, and I think so. I mean, I think this is a great thing.
I thought the May operating data was pretty good. I agree with you, Tanner. Look, it wasn't like blow your socks off, but I'm running preliminary numbers in my head, and I'm getting to 40% growth. I'm getting to 925 million. I don't know if you guys have done some of your numbers. Street's expecting 882, which would be 29% growth. If they double their other revenues, transactions, I think I have them at 580, and then in interest revenues at like 290. And we haven't had any rate cuts, so there should be no decline on the interest revenue. I mean,
what's your revenue at?
925.
I'm at 928.
Dude, so they're gonna grow 40% in Q2.
Yeah,
and they're gonna, and the street, if I'm not wrong, if these guys don't freaking raise the target the day before, the street right now wants, of course they raised it, 890. It was 882 a week ago, so they raised it by 8 million. They're probably gonna get to like 915, but still, we're gonna do another 40% quarter, which is crazy.
I'm gonna price is right, you Tanner, even though I've not done any of the work. 929, just to.
yeah. Well, I mean, we don't have June numbers yet, right? So this is not my final guess.
So my assumption was that June is exactly like April. That's what I used for my estimates.
Got you. I did. I do a mix of the two.
Okay.
And the average between the 2 months.
Yeah, I didn't do the average. I kept it like April. And if that's the case, maybe we get to 930, 940 if it like really is good. But
yeah, I mean, overall options is doing phenomenally and equities is doing so great. But like some people, I think, don't realize how much equities is like, it's a bonus, but it's not even remotely the the business model anymore, which is hilarious because it was the core. But yeah, crypto is the everything now. And if that shows up really strong in June, we'll smash estimates. And if it holds out the same, then we'll be kind of right in line with Q1 of 2025. Still a great quarter, 45% growth. Year over year, still 97% growth. Like that's phenomenal. But
did you guys account for Say Technologies?
Yeah.
Okay, good.
Yeah.
All right, perfect.
Well, it usually comes out strong, right?
Yeah, very strong Q2.
Say, well, yeah, then maybe I'll add a couple million. So maybe I get to 930 then.
Look, okay, so here's the better question. Can we, should we be at 75 right now? Like, how are you thinking of this stock?
I think the number one winner of any large TAM market can be priced twice as high as the second best. I mean, Shopify forever will be expensive. And there's no need for it to go down because no one can compete. So if I look at it very similar to Shopify, which Shopify says for every 49 accounts that come in, or sorry, for every one account that we lose, 49 have come in. Okay. Robinhood said a very similar statistic that puts them in a league of their own, that they're ACATS positive, meaning that they're transferring in more than they're transferring out across every single institution in America. That is insane. There's not a company that they compete against that they are losing more assets to than winning. I bet you there's not another brokerage that can say that, other than, brand new ones that are like just starting to get funded or something like this. I mean, like at size, or if you want to even go more extreme, public companies, there's not another one that does that. Because they're going to have one deficit, which is Robinhood, because they're going to be negative on Robinhood, any one of them.
Yeah, I mean, look,
and that deserves a premium. Sorry,
Roy, I'll throw it to you. Does Robinhood deserve 75 right now?
Yes.
Why?
I mean, they're dominating the market. When the market understands like that, this is a leader in their space, in their industry, they give it a premium. That's what we're seeing with Palantir. Now, you might say that premium is too much, too far, but you look at Robinhood's metrics, it's not crazy. Like forward PE, or PE currently is 41.89. Forward PE, just because they expect less revenue next year, is 50. Now, that's a little bit high. 41 is not crazy for 50% year-over-year growth. And again, we're looking at what, 40, 44, 45% potential growth here in the next quarter. You see all these new products that they're launching. They're expanding their TAM. You look at what they laid out during Investor Day, that they have a very clear understanding of what they do best, of where they need to attack next, where the potential TAM is, and they executed at just a fundamentally high level. Like one thing that I've learned about Robinhood is like, yes, last year we had a discussion on like the moat and its user interface and stuff. There's a lot of aspects of the moat, but I think the number one feature of their moat is speed. There is no other company that's in this space that can ship with excellence at speed like Robinhood. And if you are faster and better than all of your competitors, guess what? You're not going to win at everything. There will be setbacks, but you're going to do a whole lot right. So it's hard to see Americans over time investing less. Like the other little piece too is like AI can disrupt a lot of things. I don't think it's going to disrupt personal investing.
Yeah, I agree. And I also think 75 is warranted because S&P is going to all-time highs. I mean, my target end of year is closer to 6,500. I think we're getting there. Robinhood's not going to be stuck in the 70s if they're growing upwards of 40%, if we're at all-time highs, if Bitcoin is anywhere near the 120s, 130s, even if it stays at 110, as long as crypto volumes are relatively decent. We'll talk about the crypto event in a second. And if they keep putting out new stuff that we haven't heard of. So we have the crypto stuff we'll talk about, but who knows, dude? They have another active trading event later this year. We might have some more updates coming along the lines that we don't know anything about. Singapore expansion. I mean, there's just too many catalysts for the street to fade it. And unless we get either a recession or a straight up bear market like we had in April, a lot of people are going to take a chance on Hood and they're going to pay the premium and they're not going to be afraid to do it.
Yeah.
So
Yeah.
I bought more today at 70, dude. I'm not really that afraid of it right here. I'm really not. And I think we're going to be okay.
Which I love, by the way. That's awesome. That's awesome. I haven't really been buying much of anything recently.
Yeah. And it's just a question of, how this market ultimately plays out towards the end of the year. So let's talk about the June 30th announcement. So they officially announced an event for crypto. It's going to be in France, and it is called To Catch a Token, which is implying something I think we've all been speculating about. Roy, what do you think they're going to be introducing at this event?
Probably some crypto items, I'm guessing.
Yep.
Seriously though, they've talked about some of it, like the importance of crypto staking. They've probably some institutional products as well, just because Bitstamp is now integrated, that they've completed that acquisition. Robinhood has a great ability, and a lot of companies don't do this. Usually the way an acquisition works is like, ooh, that looks attractive, and maybe we'll integrate this into our ecosystem. And then there's like bad companies like PayPal of the past, not right now, but which are like, let's just buy this and then forget that it exists and set it on autopilot. Robinhood, they have a very specific roadmap that's well established. Vlad has talked about this before, where he's dreamed up products and features like, I think it's a couple decades out. Like, it's not just they're going like over the next like 6 to 12 months. And so they look at what they lack as far as their ecosystem, and they make acquisitions around that, or they develop products around that. And so we've seen, of course, Bitstamp is not just about, hey, more exposure and easier time with regulation in Europe. There's a lot more that's going to be built out because of that. Their partnership in the USDG, the stablecoin, that's another one where like they've not done anything with it. Look at what is on their 10K as far as the sheer amount of stablecoin that's on there. This is the year of stablecoin. They're going to launch something compelling with that. Probably crypto lending as well, which will be their first lending product. And I'm sure there's going to be like dozens of other things too that we've not even begun to imagine. But those are the big three that I see.
Can I show some numbers?
Yes.
Only if it's in spreadsheet form.
It is in spreadsheet form.
Okay, well,
what's it called? How much would you say technologies would add disproportionately this quarter than last? I didn't bring that up yet. We can play around with the numbers.
It's substantial because of the proxy materials for the quarter. I think it was 25 million extra. I might be wrong.
Crap. Okay, well then we might be doing fine then. If we go ahead and take a look, this might actually be low on revenue. Then I might need to bump it up another 10, 15 million here. If it really is 25 million higher usually.
Yeah. Let me find my post on it.
It usually is about 25. He's right.
Yeah. So let's take a look at some of these numbers that I'm getting, and then we can go through. So first off, monthly metrics, we can compare this a bit. This is what I'm looking at, about 173.6 million for equities, 175.9 million for options, and 11.18 billion for crypto.
Yep.
So with that, we can then go to sorry. Where the heck am I? Here. Okay. The take rates that I'm assuming is a slight bump up for equities, same for options, and then about a 0.02% increase on crypto, which might even be on the lower end. It might be 0.58 maybe. So these are the numbers that I'm assuming for guide, which, like I said, was the average of April and May, taking the midpoint. If we go up and look at transaction or the transaction numbers, I get 169 million in crypto, which compared to the last two quarters, like this is why crypto is so important. 252 in the last quarter, or before that, 358.
Yeah.
Like insanely high number of just overall transaction revenue. Now, equities, 75 million, absolutely phenomenal. But like you see, it doesn't even make up for the difference between what we've seen in the quarters between crypto. And options, 247. It's awesome, but only 7 million higher than last quarter. Still great. But yeah, overall leads us to 530 for transaction-based revenue, negative 9% quarter over quarter. Net interest revenue, I'm doing the same take rate on assets under custody at 0.13%, which gets me to 338 million. And then for other revenue, I have it at about 65, which if Roy is saying it needs to be higher, considering Q2 last quarter was 70, probably means that this one's probably higher.
Yeah.
Let's maybe put it at 80 or 75. We're looking at 948 million.
So I've got this from the 10K. Now, not all of the proxy revenues come in quarter two, but most of them do, just because of how companies report. And you can see there, it was actually down slightly year over year last year. So it's something to keep an eye on. But you can see the other revenues there as well that are growing. So you need to be higher. You'd have to pull this up, but look at quarter two of last year just to see where they were at on proxy materials. And I'd probably project the exact same amount under other revenue. But yeah, I didn't find that. I just pulled up the 10K real quick.
Yeah, I don't know what I'm missing. Oh, and by the way, contra revenue we know is 100% baked into the revenue. Sorry, I wasn't actually. I was just looking. Yeah, I'm not really trying to show anything.
But that's why my estimates were off last time, because I didn't realize it was baked in, and that's why.
Fully baked in. So, I didn't think about Say Technologies. It could be a great quarter.
Look, here's my thing about crypto revenue declining. Because we have easy comps to 2024, we're going to be okay this year. The hard part's going to be 2026. That's why I think the earnings estimates fall off a cliff, because Street doesn't expect we're going to be doing 5.5 billion, which would be that 40% growth in 2026. And I don't think so either. But if Vlad can diversify the business enough over the coming 12 months to the point where when we do inevitably enter a little bit more of a bearish time for a couple quarters, not just a couple months, there might be a way for Robinhood to make it out alive and still keep their growth. Now, here's the thing. If we are in a massive bull market fueled by AI that we talk about every day, what if the next 5 years are just like the party keeps going?
It really, not just AI, but also crypto. If we see, like I posted about that Tom Lee thing, if he's right and Bitcoin goes to 150, 200, whatever his estimate was, I think he said even as high as 250. Like the crypto revenue that we look at, even in these past 3 quarters, to the comps to next year will be nothing. Like the crypto revenue will be low. Let's not forget, we have Bitstamp now. That's not incorporated last couple quarters, and WonderFi coming on. Like the crypto percentage is going to increase so dramatically in Robinhood that if we do have a down season or a crypto winter, it's going to impact Robinhood even more. It'll be exponential to what it was before. Does that scare you guys, by the way, or is it positive?
What scares you?
The larger exposure to crypto. Like crypto is going to continue to grow as a percentage of Robinhood's total revenue.
Not really. Like, again, short-term crypto winter hits, that's bad for Robinhood. Long-term, I think crypto will move in one direction. Not all crypto, but I think it's here to stay. It's going to grow, and it's seen as an asset instead of just a meme at this point, for the most part. So Robinhood having an outsized positioning in that, especially with where the current administration is and regulation, I think is very bullish. But again, I do think it wouldn't be shocking if we see a crypto winter before the end of the year, and that's not great.
Yeah, I mean, look, I don't love that there's that so much of the revenue is tied to crypto, but if it's going to continue, and again, this deficit spending that we're doing, it's like people are wanting a counter-cyclical hedge in an institutionally supported asset now, which is Bitcoin. And if that continues, I mean, the meme coins can die out, but as long as Bitcoin and Ethereum and Solana are those kind of core 3, Robinhood is just going to capture more market share. Also, Vlad said today, Bitstamp gives them 5,000 institutional clients today that they've already been getting revenue on for the past year. If they grow that business, maybe that could be at least something to massage some of the trading volumes going down from retail.
Yeah,
Yeah,
Matt Money had a great comment real quick. He said, I'll be looking to buy Hood during crypto winter. Like, honestly, like if we have crypto winter starts tomorrow, it's not going to, but if it does, and Robinhood falls over the next few months to like $30 a share, I'm buying more.
Yeah, it's a pretty easy buy the dip.
I got a couple slides to show. Give me one sec. So one, I am excited about the institutional clients, more so the way that I'm excited for like Galileo being a part of SoFi to advance their retail products. Like, I actually think it'll be better for learning how to offer, their own retail clients better things. But in terms of their revenue, I'll show you this here in a second, but it's not going to make a dent. Maybe it will. Maybe you guys don't agree with me, because sometimes you guys don't agree. Okay, take a look at this real quick. Bitstamp's exchange volume is mostly institutional. That's what they said in the report. After stating approximately 5,000 funded institutional customers are on this platform. Coinbase is also identical in that way. Retail makes up for 20% of their total volume last quarter. Institutional makes up for the large percentage. But the rates in which they charge retail versus institutional is nowhere close. I mean, it's disgustingly low. So what ends up happening is that 87% of total transactional revenue still comes from retail. Like 80% of volume is institutional, 13% of revenue is institutional.
Right.
You know, it's a tiny feat. So I don't think that matters as much. What I also thought was interesting, really quick, I wanted to show this part. Bitstamp serves over 500,000 funded retail customers. Do you guys know what I'm going to show you next?
No.
How many reported customers Bitstamp says they have on their own website? 5+ million customers. What the heck is that? So have they had 5+ million in total, and 90% of them, or whatever the number is, 90% have dropped off?
That's what it sounds like.
Or they weren't active.
Yeah.
Right?
Or
and that's why Robinhood's not saying they're going to get 5 million customers.
Yeah.
And
can Robinhood win those customers back?
Maybe. I'm very interested really to see what they do with Bitstamp, rather than, because Robinhood doesn't just, again, do what PayPal did, 5-10 years ago, is buy something and just let it coast. They buy something and then they evolve it. So we saw that with X1, which wasn't just about debit card exposure. It's the gold card ultimately they got built into, which is compelling. And I think they'll do the same thing with Bitstamp on the institutional side. That's what got me very interested. It's their first institutional product. So how they build out their crypto as a service type products, it's not just about the current exchange volume, but it's about whatever they're building out. So that's what's exciting with the crypto event. The other thing that's super exciting, when we were talking with Vlad, this was in New York. So before the San Francisco event, we went to the San Francisco event. It was awesome. It was great. Do you remember what event Vlad was talking about in New York, though? The Crypto Summit. He was so excited about it. Like,
giddy.
Yeah, giddy. He used the word giddy. And so what they're announcing, like, I probably got like 3 out of like the dozen fascinating things they announced. And there's going to be some amazing things that they announced that I've not even begun to consider. You and I haven't. And there may even be some things that are like, nobody else does this yet. Or it can't be done. Robinhood likes challenges like that. Vlad loves it. So I'm very excited to see where it goes. Now, if this is a very different company that bought Bitstamp, I would not be nearly excited. But again, it's about the future, not the present.
Yeah, honestly, we don't have the time this week, but we could have done a double episode because there's so much that we haven't covered recently on Robinhood. Could you pull this up really quick, Amit? In terms of the things that could be shown off at the crypto event,
You're not sharing anything.
You don't see that?
No, it still has the Bitstamp.
Yeah, that's what it was. This.
Oh, okay. Sorry.
In terms of what they could offer, I think it's honestly a lot of them are on Bitstamp's current offerings right now. Crypto staking, not just in the EU, but in on Robinhood. So you're taking something that currently 500,000 people use, and you're giving it to potentially 25 million. That could be a big offering. Crypto lending, that could be a really big one. And then they've already stated that they've started to bring Bitstamp over to Legend. I think a lot of the advanced trader tools that Bitstamp has been able to design over the years could be an easy add-on to Robinhood Legend and a more advanced crypto trading platform than what Robinhood is used to. I think those are easy things that they could talk about. But in terms of the marketing that they're showing off and the partnerships that we've seen from Robinhood recently, I think there's going to be some sort of stable coins thing. They're showing off $1 in the thing. Like I think it will have something to do with that. Real world assets being announced, these types of products.
That, along with that tokenization stuff, that again, if they increase retail volumes, even if it's only in Europe with tokenization, that plus all the stuff you mentioned, Tanner, maybe that also starts diversifying crypto so that it's not literally just dependent on retail investors in the United States buying Bitcoin.
And crypto for Robinhood, unlike any of their other products, is super international.
And they bought that Canadian exchange recently.
Yeah. So take a look at this. Like these are the markets, or some of the markets, by the way, that Bitstamp is looking into: Canada, Italy, France, Luxembourg, Slovenia, Spain, the Netherlands, US, UK. These will be opened up quickly. That's exciting. And it won't be for 500,000 funded accounts. Hopefully it'll be under the marketing guise of Robinhood, which has been very successful.
Okay, last thing let's discuss. 3 million people on the credit card. That was announced by Steve Quirk last week. We'll just do 2 minutes on this. Our friend of the channel, Data Driven Investing, was not really the most excited about these 3 million people. Vlad actually responded to him for the first time. I think Vlad knows who he is, and he's been seeing Data Driven's counter perspectives on the Hood thesis, and he responded. Essentially, DDI's point was that they're not going to be profitable. He responded, "Remember that the reserves include the historical X1 card. We are building the gold card to be a standalone profitable product, and like what we are seeing, we've been accelerating the rollout and are looking forward to accelerating it further." Roy, your thoughts on Vlad's response?
Yeah, it's a perfect response. I'm skeptical that it can be a standalone profitable product. I think that they might get it close enough. Like if it's a loss leader but not much of one, that's fine. That's great. Actually, that's a success. It's Costco's chicken that gets you in the door. But there's a reason why they're rolling it out slowly. There's a reason why that wait list is building up, because people want the freaking card because it's amazing. And it's not just about the 3%. Like, I have it. I own it. The interface is amazing. The features are amazing. It's a great card. But customer acquisition costs are also like not substantial for this product either. So,
Tanner.
Yeah. I find it hard. Clearly, they have some sort of roadmap that they see where they can get it to be standalone profitable. But what data-driven investing sees is that he understands the amount of interchange fees that the networks charge to, or that Robinhood can make by charging their merchants, and then we know how much they're paying out, which is 3%. And that math is very clear, and it's so very clear that they will be down nearly 1% or a little over 1% on every single transaction. So how do you fill that gap? Balances. And then the problem with balances is, one, it's not guaranteed that everyone will take balances and not pay them off instantly. And then two, it's not clear that those people who have balances will ever pay you back.
Yeah.
So it is a game of balance, and Vlad believes they can get there, and other people are still skeptical. But yeah, I think it is fair to say that because no one has done 3%, it's not just because other financial institutions have been greedy. It's because it's a pretty freaking hard challenge to solve. Yeah, we'll have to see.
I do think there's two things. One of the things that makes it hard to do 3% is the customer acquisition cost, which goes to zero for Hood based on, the 3 million wait list that they have. So that's one thing that helps them. Number two is the ecosystem that Roy was talking about a lot, of your 3% cashback goes right into the brokerage, which becomes a net deposit, which can go into the cash sweep, or which can go into buying crypto, which then they make the money on the back end. And then the banking product in September, which is going to be,
but that's not standalone profitable.
Fair. That's a good point. I just think that my takeaway from 3 million people is that 3 million is going to be 10 million over the next 5 years if the credit card succeeds. And then even if it's not standalone profitable, if we agree that that's too hard to achieve, it will be value creative for the business. And if they can actually make it standalone profitable, that gets very exciting.
Yeah, it's definitely the right move for Robinhood. They have so many other ways to make money with people coming in, especially whenever banking comes in. That will be the massive cross-sell for credit cards. That'll be their bread and butter. But
it's ridiculous, the ecosystem, the flywheel that they're building. But there is one aspect of the credit card that is very bearish and just it almost makes me want to just give up on the product. And you see the logo right there? It's their old logo. Come on. Short Hood.
That's a fair point. It's a fair point. Someone says right here, somehow Amex and Visa are making a fortune. Reminds me of their acquisition cost and advertising cost. 3% isn't a lot when you look at all the expenses they don't carry. Yeah, and Vlad's just got to prove they can, make it standalone profitable.
I know the difference between a 1% cashback and a 3% cashback doesn't seem like a lot, but whenever you're transacting hundreds of billions, if not trillions of dollars for Visa, 3% on what was Visa's annual transactions last year? 15 trillion. It's a ton of expenses. So the slight increase in cash back is a fortune.
Yeah.
Let me add just one thing. If Vlad pulls it off, and I'm still skeptical, I'm not, until it actually happens consistently over time. But if he makes it standalone profitable, I think that the sentiment for investors on X might shift from don't bet against Elon to don't bet against Vlad. I mean, because that's pulling off the impossible.
Yeah.
Vlad legit could be the next elite entrepreneur, like the guy you do not short. I completely agree with that. He's in the running, which is crazy. And it's crazy that person is not in the S&P 500. What the heck is going on?
I know. William Sonoma.
The good thing is if they include us when the market cap's 80 to 90 billion, the buying pressure is going to be so much higher. And so,
yeah. For bulls that are watching right now, this is your no financial whatever, but the longer we wait only means that we get a better weighting whenever we do get in.
Yep.
So it doesn't matter. The end game will be the same, but it's the opportunity to buy in now is cheaper than if we got in on Friday or whatever.
Yeah, we'd be sitting at closer to 85 if we got it. I mean, the thing is, the reason you and I fell for it, Tanner, is because we pumped to 81, basically 80, 87. And we were like, all right, cool, we got it.
Yeah, and I saw 5 separate Bloomberg accounts post about it.
Yeah.
I was 95% sure we got in just based on that pump, but I'm still going to be cautious because I've been burned.
Yeah.
It's shocking.
All right. Good stuff. Thank you, everybody. We'll be back next week. We will keep diving into all this. It was a full Robinhood episode today. We'll probably discuss NVIDIA more next week, and there's a lot of bullish stuff that has been happening for that. All three of us own NVIDIA. Roy and I pretty much own it because of Tanner, so shout out to Tanner.
Yes.
But yeah, we'll keep going from there over the next couple weeks.
Payush said, wrap it up. Oh, man.
All right. Thank you. Appreciate you guys. Sofa Kingdom with a $5 super chat. When is the IPO of Amit available? Only if Tanner and Roy go public with me. We're all three going to do a.
We'll be tokenized and available in Robinhood's exchange.
There you go. That's what we're going to do. Thank you, everybody. Appreciate it. I'll see you guys in the market open tomorrow.
Thanks, guys. Bye.